Hello, I'm Tyler Gratton.
I'm Nate Goodwin.
Our group is Additional Paid In Capital. This is Group Project 3. Our our company's Nike. The gross profit of Nike is $12,446,000,000. Their gross profit ratio for 2014 is 0.448. For 2013, it was 0.436. Their operating income is $3,680,000,000. Their net income is $6,693,000,000, and the gross profit has increased, but only slightly. And this ratio tells us that for every dollar Nike earns, it really only has about 45 cents at the end of the day.
All right, our earnings per share for 2014 was 2.97. For 2013, it was 2.68. The amount has increased, meaning the company's profitability has increased. Price per earnings ratio was 32.6. This ratio is an expression of the investor's expectations. It's a general guideline to gauge stock value.
Hey, this is Travis here. Alright, Nike uses an indirect method for their cash flow statements, and I know that because at the beginning of their operating income, it shows net income, and then they subtract all the other flows of cash from that afterwards that don't affect cash, if that makes sense. Okay, so investing activities, the different parts of that make up that are like purchases of short-term investments, maturities of short-term investments, sales of short-term investments, like additions to property, plant, and equipments, and then they have a total, which is like a loss of $1,207,000,000. So then they've done financing activities. We have net proceeds from long-term debt payments, including current portion, and increase in notes payable. Then we also have like payments on capital lease obligations and all of that stuff, and even income taxes. It was included in the financing part. The other parts that were in cash provided by operations were, besides net income, were like cash provided by operations, which is a whole section on itself, and then they had a total in there. But that's all for the cash flow part.
I'm Adam Gray. I found that in the investing section of the cash flow statement, Nike spent roughly $5.4 billion on short-term investments. I also found that their previous short-term investments matured and profited to roughly $3.9 billion over the course of the year ending on May 31st, and they recorded sales of short-term assets for a profit of $1.126 billion. Based on what we've learned in class, I would say yes, I would invest in this in Nike. They recorded $27.8 billion of revenue in the last period and only spent $2.9 on financing activities, which tells us that a lot of their money comes from their operating rather than from the bank. This was Additional Paid In Capital. Adios. I don't know how to get out of this.
Time.